Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to reveal the juicy secrets within you. Might not want to miss what is coming up next in this report, because it involves selling off some big hotel properties. It is a very interesting deal. Today we are diving into a report from Moody National REIT to Incorporated. It is basically a company that owns and manages real estate, specifically hotels, and they are reporting some big moves. This report is a Form 8K, which is used to announce major events that shareholders should know about right away. The most important date here is the 15th of September 2025, the day the earliest event we are discussing happened. Moody National REIT II Incorporated is based in Maryland, but their main operations center is in Houston, Texas. You probably know them for owning hotels. Here is a key piece of information. The commission file number, this is like their unique identifier with the Securities and Exchange Commission, also known as the SEC. This report does not list any specific stocks or bonds registered on an exchange, which tells us they might not be directly traded on major stock markets in the way you typically think of big companies. Now let's get to the heart of it. The company is entering into some pretty big agreements to sell off some of their hotels. This is a material definitive agreement, meaning it is a significant contract that can change the company's future. First up, they have an agreement to sell a hotel called the Hyatt Place Germantown, located in Germantown, Tennessee, for a hefty sum of $11 million. This sale is subject to certain conditions and is expected to close on or before 30 days after the 15th of October 2025. But remember, there is no guarantee that this sale will actually happen as planned. Next, they are selling the Spring Hill Suites, located in Seattle, Washington. This is a much bigger deal for a cool $51 million. The closing date for this sale is set for the 2nd of December 2025, or a later date if both parties agree. Again, this is not a guaranteed deal, and it is important to note that these two sales, the Germantown Hotel and the Seattle Hotel, are completely separate events. One sale does not depend on the other. This part is just the official sign of showing that the company is being transparent and following all the necessary rules. And the report is signed by Brett C. Moody, the Chief Executive Officer and President of Moody National REIT II Incorporated. Now let's talk about what this all means. Selling off major assets like hotels is a significant strategic move. Moody National REIT II is essentially reshuffling its portfolio. The $11 million sale of the Hyatt Place Germantown and the much larger $51 million sale of the Spring Hill Suites in Seattle suggest a clear strategy to free up capital or perhaps to exit certain markets or hotel segments. Selling the Seattle property for $51 million is a substantial amount of money and signals a significant shift in their asset base. These sales could be driven by many factors. Maybe they think the market is favorable for selling now, or perhaps they need the cash for new investments or to pay down debt. It is also possible they are divesting from properties that are not performing as well as expected or are not in line with their long-term vision. Looking at this from a Warren Buffett perspective, we want to know why they are selling. Are they selling winners to reinvest in something even better, or are they cutting their losses? The fact that they are selling off sizable properties for millions of dollars means they are actively managing their business. Not just sitting back, a key risk here is they themselves. State is that these sales might not happen at all. Deals can fall through due to financing issues or other unexpected problems during the closing process. The company's decision to sell these specific hotels tells us something about their current outlook. If these are prime properties, then maybe they see better opportunities elsewhere. If they are less profitable properties, then it is a smart move to streamline operations. Without more financial data like their overall revenue and debt levels, it is hard to say definitively, but these transactions are definitely worth watching to see where the company is headed next. So what is my take on this? Moody National REIT II Incorporated seems to be in a phase of active portfolio management, possibly even a transition. The large cash influx from the Seattle sale could fund new acquisitions or strengthen their balance sheet. The main risk, as highlighted, is the uncertainty of closing these deals. It is a sign of a company making big moves even if the outcomes are not yet guaranteed. We will need to see subsequent reports to understand how they redeploy this capital. Alright, that is our decoded look at Moody National REIT II Incorporated's latest filing. What are your thoughts on these property sales and what they might mean for the company's future? Let us know in the comments below if you found this breakdown helpful. Please give this video a thumbs up and subscribe for more insights like this. Also join our Discord community linked in the description for even more discussion. Thanks for watching, and we will see you in the next one.